A bipartisan group of lawmakers meeting in less than an hour to merge the House and Senate financial reform bills. So what will the final version look like? Joining us now from Capitol Hill is a member of that conference committee, Republican Senator Saxby Chambliss of Georgia. Senator, welcome. Good to have you with us. You sit on the Agriculture Committee and are the ranking member there. And your colleague across the aisle, Chairman Lincoln, has been pushing this idea that the banks have to get rid of their derivatives trading or their swaps desks. Is that going to be in the final version or not?
Well, I certainly hope not. The one thing that we all agree on, Tyler, is that we want to make sure that we put in place the proper restraints on Wall Street to ensure that the regulators are able to see what's going on within these banks or other financial institutions that may become or are systemically risky. Swapping out or moving swap desks out of the physical facility of a bank is simply not going to enhance that. What that's going to do is simply require financial institutions to put more capital in place just to be able to deal in the swaps, as opposed to using that capital to loan it out to small businesses and other entities to create jobs. What we've got to make sure of is that at the end of the day is that we give the regulators the opportunity for transparency of the entire market when it comes to swaps and derivatives. We don't need to overreach in this bill, and frankly, the requirement, what we call the 716 requirement that you alluded to, is a very much of an overreach that is not going to improve the ability of the regulators to increase transparency and to deal with these systemically risky institutions.
So how does it get either bargained away or amended in such a way that that both sides, the people who are in favor of it and the people who oppose it, such as you, can find some common ground?
Well, during the debate on the Senate floor, I had an amendment that would have eliminated this particular provision, and I had any number of Democrats who came up to me and said, look, we know you're right, but we're kind of in a box on this, and we want to support you. We hope you can generate the votes to be able to eliminate that provision, but at the end of the day, they didn't vote with us. So now we're in a position to go into conference, and we're hearing those same comments once again from both the House and the Senate side. This provision is not in the House bill, and what I'm very hopeful of is that some of the leadership in the House will step forward and say, look, guys, this is not the right way to go. It's very much of an overreach. Let's do the right thing. Let's remove that provision, and let's concentrate on where the real danger is.
And what about the Volcker rule? How does that survive, not survive? What's your handicapping on that?
Well, I think the Volcker rule is probably a pretty good rule if the definition of the Volcker rule is what I think it is. The problem is that when you say the Volcker rule, there are about 15 different interpretations.
So what's your definition, Senator? What would your definition be?
What I think needs to happen is that we need to make sure that every single transaction that comes into the marketplace, if it's within an end user that is exempt under the law, and the facilities and manufacturers that are not systemically risky ought not to have to go through a clearinghouse, but those that are systemically risky ought to go through a clearinghouse. We can deal with the others simply by having them report to the regulator, and the Volcker rule will ensure that that happens. What we need to make sure of is that 100% of the transactions are viewed by the regulator. And my interpretation of the Volcker rule, that it will require that, and that we can make sure that that's done.
Hey, well, quick question, Senator. How many people are on this conference committee? How many? And can you get work done with that many people?
Well, I'm not sure exactly how many conferees the House has. They've got about 4 or 5 different committees involved. We've got just 2 committees in the Senate, Agriculture and Banking, and we've got a pretty reasonable number. I think there may be 12 of us.
And sir?
But I'm guessing there are probably about 30 or so
House
members.
What I'm guessing too. That's a lot of people.
Senator, what do you say to people who look at MMS and see the regulatory capture that happened there? They look at what happened with the SEC and Bernie Madoff, and then they look at a huge committee like that, and they wonder if Congress can ever get it right?
Well, those examples are very good examples of why Congress does need to step in right now and provide some additional regulation into an already heavily regulated industry, being the financial industry. MMS didn't have their ducks in a row. The SEC did not carry out the authorities, frankly, that they have been granted by Congress in their review of the Madoff case. We've not only got to make sure that the rules are in place, but we got to make sure that the congressional committees do the proper oversight, whether it's government relations, whether it's banking, whether it's agriculture. We got to make sure that we're able to look in and ensure that the regulators truly are carrying out the authority that we need to give them in this particular bill, unlike what happened with the SEC in the Madoff case. But that's
Senator,
a classic example.
Senator, thank you very much for joining us, and good luck with your deliberations.
Thanks very much.
So the markets are still in positive territory. We've got a very nice rally going on. We're going to head to the floor of the big board, get the daily buzz from